You have probably heard that building a profitable stock portfolio is just about buying a bunch of good companies and holding on forever. Well, that's completely wrong, and it's why most portfolios lose money. If you want a portfolio that actually grows your wealth safely in the long term and consistently as well, I'm going to show you exactly how I would build a 100k stock portfolio from scratch, give you a few examples of some names that you can see there as well, alright, step by step, using an actual strategy that can bring long-term profitability. Let's go. So before we look at some of the charts and some names and how do you actually build a portfolio from scratch, I want to share with you guys some of the mistakes that most people make when they actually buy stocks and lead to their stock portfolio. So one of the most common mistakes is that most people start off in the stock market thinking that they want to make some short-term gains, right? Short-term gains. So they kind of do a little bit of research and they buy some stock and hopefully the stock moves up and they make some money in the short term. However, most of the time, alright, if the stock were to move down, most people would tend to hold on to the stock blindly. So that's how most people build a stock portfolio, right? They buy some stocks, they, if it goes up, they sell, they make a few $100 profits and they move on to another stock and they buy, all right, and they hope that you go up again. It goes up, good, they sell and they make a few $100 profit again, all right? But along the way, there will be stocks that will not do well. There will be some stocks whereby you go down, right, below their entry price and there'll be some small losses, right? And due to all these small losses, what happens is that most people will tend to hold on to the stocks, right? They tend to hold on to the stocks, and these stocks that were meant to hopefully make some short-term gains becomes added into their long-term portfolio. So that's where they build that long-term portfolio just by holding on to all these losing stocks. And that's what we have seen while working with thousands of clients. We've seen many clients holding on to like more than 20, 30, 40 of the stocks that they have no idea why they were holding on in the first place, right? They've been holding for more than 4 to 5 years, 10 years as well, all right? And it's just because they make some small losses and it became into their portfolio, all right? And that's how their portfolio was made. So you don't want to make these mistakes, right? And that's not how you build a portfolio, all right? And that is pretty much a portfolio where it became long term, well, not because you planned for it or you wanted to build a diversified portfolio. No, right? It was because of you making some small losses, and one by one, this losing stocks gets added into the portfolio, and you have like 20, 30 stocks that forms the portfolio which you just held onto it. And most of the time, because these stocks are not really doing that well in the first place, right, and they get put into the long-term portfolio, all right, most of the time will not do well, all right, and that's where your portfolio value will go down and down and down. You'll wipe out a huge chunk of capital. So don't do that, right? Don't do that. Don't just think about trading short-term and then put these losing stocks into the portfolio. So don't do that. Let me show you guys what would be the right way, all right, just to give you guys a bit of an example what to do from scratch, assuming that you have $100,000 to buy some stocks, right? So it's a brand new stock portfolio. So we not look at things like unit trust or funds or property or bonds or everything. Let's keep it simple, right? Let's just focus on stocks, right? Purely stocks, $100,000 into stocks. How do you actually build or create a portfolio from scratch? So first thing first, when you build a portfolio, right, in terms of a stock portfolio, you want to have portfolios with two different time periods. So I would say that you can have a portfolio more for the longer term, whereby you want to buy and hold these stocks for the longer term. You got 2 years, 3 years, 5 years, strong stocks, diversified portfolio of stocks that you really, really want to hold for the longer term, right? Not because I mentioned just now because you make some small losses and you put it in, no, right? But you actually do a bit of research and you want to buy into some of the top fundamentally strong stocks that are also strong technically that you really want to hold for a period of time, right? It could be in the 2 to 3 years or more than 2 to 3 years kind of a period. So that's what we call a long-term portfolio, right? So this is kind of like planned out, all right? Of course, you want to do a bit of research as well. I'll give you guys some names, what are different sectors, different types of stock that you can focus on as well. But essentially, this portfolio is meant for the longer term. So how much out of this $100,000 should you put in the longer term portfolio? Well, I would say that for a start, you could put like maybe up to 70%, up to 80% of your entire funds into the longer term portfolio. So let's just say you put in like maybe 70%, right? 70% of like $100,000, that'll be like $70,000. So let's say we have like 70K, all right, $70,000 you can put into the longer term portfolio. So should you just put all into 1 stock, 2 stocks, 5 stocks? Well, how many stocks should you put inside? Well, I think what happens is that you want to build a diversified portfolio. You don't want to put all your eggs into one basket. I think you've heard of this phrase before, right? You can diversify, all right, and you can diversify into what we call different types of stock, different sectors. So let me just give you guys an example, like $70,000. What you could do is to actually split it up into what we call 10 different types of stocks or 10 different sectors. So for example, right over here, 1, 2, 3, 4, 5. So let's just say 10 different types of stocks, all right, for this $70,000. So let me share with you guys how you can do it. So $70,000 divided by 10, that would be like maybe about $7,000. So let's say we have like 10 different types of stocks or different sectors, right? You could put like $7,000 into each type of stock. So 7K, 7K, all right, you get the point, right? So what are some of the different types of stocks that you can focus on? So for example, let's say you want to focus on like maybe the Singapore market or even the US market. Well, Singapore market, you could have a few sectors like maybe the Singapore banking sector. So there are 3 Singapore banks, right? So should you buy like, DBS, OCBC or UOB? Well, what you could do is that, for each of the different types of stock like Singapore banks, well, you could actually split it up into 3 other stocks. So for example, for Singapore banks, there are 3 banks. So you could buy a little bit of OCBC, a little bit of like, DBS, a little bit of UOB as well. So each of the sectors, you can buy 3 stocks. So next would be like, maybe the Singapore bank. So we have like maybe the Singapore REITs as well. Singapore REITs sector. So same thing, right? You could put your funds into not just one REIT, but into 3 REITs as well. So do a bit of research. Well, one of the REITs I could share with you would be like Fraser's Hospitality Trust. So you want to further diversify into that specific type of stocks or for that specific sector, not just buy one stock only, right? Like for example, for the banks, right? OCBC, DBS, and UOB. I would say that these 3 banks has been doing pretty well in the longer term. They have been moving up gradually, fundamentally strong as well. Like for example, let's take a look at maybe DBS right over here. So you can see this is DBS. Of course, we saw a bit of weakness in the short term due to Trump tariffs, but overall, since like over the past 1-2 years, or maybe over the past like 10 years, well, DBS has been a very strong, firm, long-term uptrend, right? It moves down in the short term, but each time buyers comes up and it push even higher. And even right now, right, there could be a good opportunity as well, because you can see that the longer term trend is still up. Short term, well, we did see a bit of weakness in the short term, but there could be some potential signs of a reversal right now as well. So you could kind of load it, right? Load some of these banks in as well, like DBS, OCBC, and even UOB. Like for example, let's take a look at maybe OCBC. So this is OCBC, not too bad. You can see longer term trend is up as well. All right, very strong uptrend. Right, we form what we call higher lows. Same thing in the short term, we saw a bit of weakness due to Trump tariffs, but right now it seems like we are seeing a bit of a reversal as well. All right, so these stocks could be in the longer term portfolio where you could sleep peacefully. All right, you can sleep peacefully. You want to hold it for like 2-3 years. It pays out pretty good dividend as well, more than 1-2% dividend yield. On top of that, there could be upside as well in terms of capital gains. Next would be like the Singapore REITs, like so Fraser's Hospitality Trust, one of the stocks that I shared as well. So these are some of the REITs that have been in my watch list, whereby we saw a bit of a strength coming back. All right, longer term trend is up as well. All right, in the short term, we did see kind of like the short term 20 days moving average line pushing up as well. Prices attempting to push even higher. So that could be in a longer term portfolio as well. Of course, you want to monitor them, but some of these stocks that you want to put in your longer term portfolio, they must at least be in a longer term uptrend, right? It must be longer term uptrend. You don't want to put stocks which are like going down and down every other day. Definitely that would not be in our longer term portfolio. We want to put stocks that are strong, not just fundamentally, but also technically as well. So let me give you guys a few examples. So we have like SG REIT, Singapore banks, all right, and we could also have another sector that is in the Singapore market, maybe a little bit more defensive, all right, defensive kind of stock. So it could be like 3 stocks in this Singapore defensive type of stock. So what are the defensive stocks? Well, it could be stocks like what we call Sheng Siong, one of the stocks that we caught for as well over the past few months. I think started to push high as well. Sheng Siong, we look at the chart in a bit, it's like Sheng Siong and maybe even like Singtel. I think that could be a stock in a longer term portfolio as well. Very good longer term uptrend, pretty defensive as well. Let's take a look at this stock. So this is Sheng Siong, right? Not too bad. Longer term uptrend intact. Just looking at the rate, 100 days moving average line, the blue line both pointing up. You can see right over the past few days, we did break what we call the 165 and 170, and we are kind of like attempting to push even higher as well. So not too bad, right? This could be a longer term portfolio, pays out pretty good dividend yield as well. You can do a bit of research on that. And let's take a look at maybe like Singtel. All right, Singtel, one of the stocks that we caught for as well over the past few months. Well, you can see not too bad as well. Let's take a look. You can see that, well, for Singtel, same thing, the longer term trend is up, all right, and it's been up since, I would say, last year. In the short term, it was moving sideways, and since like January started to move up. So pretty defensive, right? When we had the tariffs news that was announced by Trump, right, this reciprocal tariffs, well, most of the stocks in the world, right, even in the US and Singapore, sold off, and same thing, Singtel sold off as well, but we saw a pretty good rebound, some bullish candlesticks, and there we go, right? The rebound actually started. In fact, like the market is closed, and it seems like we are attempting to push even higher, right? Maybe above that 380 to 385 resistance level. So this could be kind of like a longer term portfolio trade as well, to put it in to really ride more upside, all right? And what happens is that I have the one good trend strategy as well, not just to look at the stock fundamentally, but also to look at the stock technically, right? Whether this stock is good to buy or maybe not good to buy, and guides us on entry and exit as well. So based on this one good trend strategy, you can see, right, I could turn on what we call the one good trend pro indicator based on the bullish and bearish signal. So this is Singtel. You can see, right, we actually had a bullish signal right over here. It starts moving up, so yeah, pretty strong, right? These are stocks that you can put in your portfolio. You can sleep peacefully at night, and you definitely want to have stocks like this in the longer term portfolio, right? Not because you, as I mentioned, you have some losses and you put it in and then it starts going down and down. No, you want to buy stocks which are strong like this, all right? Of course, this is a type of stock called the defensive, Singapore defensive sector, that you can put it in as well. So this is just to give you guys some examples on the different types of stocks or sectors that you can focus on. So for example, Singapore as well, you could focus on some of the growth stocks as well, all right? Like maybe Centurion, or maybe we have like ST Engineering, one of the stocks that we caught for since last year. Very strong rally. Let's take a look at the charts. So this is ST Engineering. You can see it about $7.49. Well, we actually had a couple of bullish 1GT signal coming out right over here. That was in like January, right? Not just last month, but since January, for 3, 4, 5 months now, a bullish signal comes out. Of course, the longer term trend has been up, all right? You can see the red line, 100 days moving average, above the blue line, the 200 days moving average, and both of these two lines are pointing up since last year, all right? In fact, over the past few months, they have both sloped up a little bit more aggressively, all right? So very good longer term uptrend stocks that you definitely want to think about putting in your portfolio as well, all right? In terms of it being a growth stock. So I think not too bad, right? It seems like we are attempting to push above the 750 and can potentially hit even higher. So just by looking at the Singapore market, let's say you have like 5 types of stocks, like defensive, growth, banks, and all that. So 5 sectors, 5 types of stocks, and each of these different types of stocks you have 3, right? So that would mean like 5 times 3, that would be like 15 stocks already just on your Singapore portfolio. What you could do is to diversify it a little bit more as well. You don't just want to put all into like Singapore market. You can also perhaps put some into like the US market, maybe even into the Hong Kong market as well. So let's just keep it simple, and perhaps you want to diversify into the US market, right? So that's where you could have sectors in the US. Same thing, like you could focus on like the US technology sector, where you could focus on names like maybe Microsoft, right? Microsoft, one of those pretty popular tech stocks as well, the Magnificent Seven stock. So just sharing with you guys some names, right? So Microsoft, let's take a look at the chart. This is Microsoft, right? $436. Well, you can see that longer term trend has been up since like 2023. Of course, over the past few years, we saw a little bit of change in the trend from up to a bit of sideways, but seems like we are starting to see some strength. Again, we got a bullish signal. It starts moving up. I think it announced some pretty strong results. It's overtaken like Apple. Let me see, right? So it's overtaken Apple as the largest US company, right? Market cap of $3.24 trillion, boosted by strong Q3 earnings. Right, so yeah, this is a kind of like a longer term stock that you could have in terms of it in the US tech sector. So you could have like 3 stocks, same thing in the US tech sector. It could be Microsoft, it could be Nvidia, if you're a little bit more aggressive as well, maybe with Apple as well, all right? And you could also have another sector that is perhaps the US defensive type of sector. So you could focus on stocks like maybe Coca-Cola, right? CO, Coca-Cola. The code is like KO. Let's take a look at the stock. So this is Coca-Cola, one of those pretty defensive stock, I would say, right? Whether is it a recession or not, I think people still drink Coke, all right? And longer term trend is up as well. A couple of selling, we've got a bearish signal starts coming down, all right? And got a bullish signal starts going back up. But overall, I would say in the short term, it goes up and down. But in the longer term, it's been moving, I would say, very consistently up since looking back the past 5-10 years, all right? So very strong uptrend, I would say. So these are kind of the defensive stocks that you could have as well in the longer term portfolio. Next one will be maybe like Southern, all right, Southern Company. The code is SO. So you can check it out, right? These are maybe perhaps stocks which are a little bit more defensive in the utility space. So Southern Company, Right over here, you can see, right, longer term trend is up. We got a couple of bullish signals since last year, 2024. There we go, pump, all the way up. Some bearish signals comes back down, but overall it's still okay because we are keeping this stock not just like, for 1 week or 1 month or 2 months, but in the longer term, right, could be up to 2, 3, 4, 5 years. So this 1 week or 2 week sell down would be fine as well. Of course, you can try to time your entry as well, but these are the type of stocks that you want to have in your longer term portfolio. So the US growth sector could be perhaps in the banking sector as well. All right, you could focus on stocks like maybe Warren Buffett's company, right, Berkshire Hathaway, right, BRK.B. That is the code. Let's take a look at this stock. There we go, right? Berkshire Hathaway, BRK.B. One of those, I would say, very stable, very consistent kind of stock. Longer term uptrend definitely intact. Look at the 100 days moving average, the blue 200 days moving average line. They're both pointing up, right? And you can see very stable since like 5, 10 years, 20 years back. Yes, it's moving up very gradually. So these are definitely stocks you want to have as well, right? In perhaps in the financial sector as well. In the US, you could diversify into stocks like this. You can see right now, perhaps it's like $512. We may be, let me just turn on what we call the bullish and bearish signals. Let's take a look. So you can see, right, a couple of bullish signals, it starts moving up, a bearish one when everything sold off when Trump introduced the reciprocal tariffs, right? But then you can see over the past few days, it seems like we've got a new bullish signal. So we might be attempting to push higher, maybe breaking the $550. So just showing you guys some names. This video is not to give you some tips or stocks that you can buy straight away, but just to give you guys some examples, all right, of stocks that you could consider putting into your longer term portfolio into the different sectors. So if you do this method, right, for example, if you have, like, as I say, right, $70,000, you divide it into 10 types of stock, whether it's Singapore, US tech, US defensive, Singapore growth, Singapore REITs, and you have 10 types of this sector. So 10 times 3, maybe 3 in each of these sectors, right? So like the banks have 3, right? Singapore banks have 3. So 10 times 3, that would be like about 30 stocks, right? 30 stocks diversified into not just in Singapore, but also in the US. And that's effectively how you build a longer term portfolio, right? And you choose each stock based on where they fit in the sector, based on the entire portfolio. And you don't make the mistake like I've mentioned just now, whereby, you buy some stocks and you do a bit of research and, they make some losses, and then you kind of like put the stocks, right, due to some losses into the portfolio inside. No, you don't want to do that, right? You definitely don't want to do that. So in a nutshell, that's how you can build a longer term portfolio from scratch based on the $100,000 capital. So what would be the other $30,000 for? Well, so for example, right, so we have like $100,000 and I talk about like 70%. So if you look at it, well, there will be like another $30,000 or 30% of funds. Then what should you do with it? Well, that is where you could do a bit of short-term trading, and you could build what we call a short-term portfolio, right? So this is a kind of like a short-term portfolio whereby you want to do maybe a little bit of like swing to position kind of trading, or it could be like 4 to 5 stocks like each time, and you want to kind of like time your entry a little bit better, right? So that could be like where your $30,000 could be. So you can see that after you have done up the entire long-term portfolio, right, that's where you have like $30,000, and that's where you could try to get a higher ROI, maybe get in and out for a couple of weeks, couple of months, all right, not just buy and leave it there, but you could kind of take a more short-term kind of trading approach only after your longer-term portfolio is done. So when you do that, right, you'll be more confident that your longer-term portfolio is done, is settled, you don't have to think about it, and now you could like just focus on 4 to 5 stocks each time maximum and do a little bit of trading, right? So what strategy should you use? Well, you could use what we call the one good trend strategy that I've been using for more than a decade now, right? It's more like a swing to position kind of like a trading strategy. So that's where you want to time your entry to get in, all right, on stocks which are not just strong in the longer term in terms of the uptrend, but also strong in the short term. So you want to try to catch trends, right? Catch trends and maximize your profits along with the trend when both the long-term trend is up and the short-term trend is up. So I don't have time to cover the entire strategy. So you want to find out a little bit more, you can attend one of those free webinars that I'm running. The link is right below the video. But essentially, right, we have this tool right over here called the 1GT Pro indicator that guides us on entry and exit. So for this short-term portfolio, you want to practice proper position sizing as well, all right, because it's more of a short-term trade. You want to have proper risk management. You want to know how many shares to buy as well, all right, and get out if the short-term trend will turn down or maybe break certain support level as well. So let me give you guys a good example. So this could be a short-term trade called like Food Empire, one of the stocks that came into our watch list in the Singapore market over the past few months. You can see, right, well, I have turned on what we call call the 1GT Pro indicator. You can see, right? So for any stocks, any asset classes, get an opinion in seconds just by turning it off, on. All right, and there we go. So Food Empire has been my watch list, I would say, since like February, March. We actually got a bullish signal right over here. We broke a resistance level, of course, the green 20 days moving average line. All right, the short-term trend started to turn up as well. All right, then and another confirmation. So that's where it started to push all the way up. Got a bearish signal when everything sold off, when Trump introduced tariffs. And you can see over the past few days, we got a new 1GT bullish signal. So this could be what we call like a short-term trade. I mean, you could put it in your longer-term portfolio as well. But if you want to do what we call like short-term trading, that could be trades like this, whereby you don't want to just buy and leave it there, but you want to do a bit of monitoring as well. If like any bearish signal comes out, it could guide you to maybe get out. Like for example, if the bearish signals to come out at the top, or maybe near 160, 180, 170, it will guide me to get out as well. So right now, I would say that we are seeing perhaps a bit of support right over here around the $1.40 level. Maybe 130 would be a near-term support level as well. So as long as it holds above these support levels with the bullish signal still intact, still in play, I would say that this could be a short-term trading opportunity. So you could focus on stock like this, and we do have a way to filter out like the top 1% of stocks, right, before being guided on when to get in and out of them, right? Not just in the Singapore market, but also in the US market as well. So I don't have time to cover the entire strategy or like how this short-term trading strategy works, but if you want to find out more, you can attend one of those free webinars. The link is right below the video, and I'll share with you a little bit more on my one good trend strategy. Yep, so this is how you can build a portfolio from scratch from $100,000. Not just put every stock right into like a short-term trading and hope to make huge gains, right? No, you don't want to do that. You want to focus what we call on the longer term first. Sleep peacefully, have a portfolio you could grow over the next 2 or 3 years. You can make adjustments along the way. You can do a bit of rebalancing, look at it every few months, take out those stocks which are weak. All right, but you want to build a diversified portfolio from scratch before you even think about like trading in the short term. Right, so for trading, well, you could put like maybe 30% of your funds into the short-term trading, right? So what you could do is that you could also put some of the funds into like CFD, contract for difference as well. So for example, $30,000, you could put like maybe $10,000 or $5,000 into CFD. That allows you to do a little bit of leverage, a little bit of like taking long and short position as well. You kind of make more efficient use of your capital. So that's what you could do, right, in terms of short-term trading, and that's what we do as well. That would be what we call CFD, right, contract for difference, right, which is pretty popular, and that's what many of our clients trade as well. All right, which allows you more efficient use of capital. So just by funding the CFD account with like $5,000 or $10,000, it allows you to do short-term trading. All right, so you could check out CFD as well in terms of if you are taking like a short-term trading position. Yep, there we have it, guys. So this is a very quick, I would say, in a nutshell, how you can build a portfolio from scratch. Just giving you some names, some ideas, but I think you get the point, right? You want to diversify into many sectors, 5, 10 sectors. Each sector, maybe 3 or 4 stocks. Do a bit of research as well for the longer term, and of course for the short term. You don't want to mix it up, right? Long is long, short is short, right? You don't want to just buy some stocks in the short term and you make some losses, and I say, right, you put them into your long-term portfolio. That is not how you should do it, and that's what many people do. So that's it for this video, guys. I hope you found some value in it as well. It's to kind of like a bigger picture perspective, all right? And if you found, as I say, a little bit more on the entire strategy on how we pick winning stocks, and more importantly, know when to get in and out of them, attend one of those free webinars. The link's right below the video, and look forward to share more with you on my one good trend strategy. So Joey here, thank you so much for watching. Go ahead to hit the like button, subscribe to my channel if you have not yet done so, and I can't wait to add more value to you. Take care, I'll see you in the next video.